So welcome everybody to this practical session. Today we are going to implement moving average in the real-time market. So I'm using TradingView to do that, and let me take a look into Apple stocks. And currently Apple is going at a price of around $116. Let's open the full feature chart of TradingView. We don't really need the volume as of now, so let's hide that. And by default I have selected candlesticks to represent my data, and candlesticks is by far the gives you a pretty much cleaner look at the data. So click on indicators, and I'm going to use moving average. So I'm going to use three different moving average, so I'm going to click on 3 times. So by default it takes a moving average of 9, but we are going to use a 10-day moving average, and the other one is going to be a 20-day moving average, and the last one we are going to use is a 50-day moving average. So when I take a look into my screen bluntly, I really can't see a difference between my 10-day moving average and 20-day moving average. So it's very important that you color code your indicators. It's really useful, and it gives you a clear distinction between the indicators. So I'm going to change this color to, let's make it purple, I guess. I think that will give you a different distinction. Yes. So I can clear when I look into my screen right now, I could clearly distinguish between the different moving averages. So the yellow one is 50-day moving average, and the purple one is 20-day, and the blue one is the 10-day moving average. So here, this is the Apple stocks. We have to look for crossovers. When I take a closer look into this, previously Apple has been having Apple has had around very good growth until the March month. So when I take a look at here, always when a smaller moving average crosses a bigger moving average, which means the trend is going to go in the opposite direction. So here our 10-day moving average has cut our 20-day moving average, which means it's going on a downtrend for a shorter period of time, and then it cuts our 50-day moving average also, which means it's definitely going down. And also our 20-day moving average has cut across 50-day and is going down right now. So it's definitely a long-term trend that the prices are going to go down, and we say this point is in a downtrend until our 10-day moving average has crossed our 20-day moving average right over here at this point, that is on 6th April, and it says it's going to have a short-term upward trend, which is being confirmed as a long-term trend when our 10-day moving average crosses the 50-day moving average, and also our 20-day moving average has crossed the 50-day moving average. It's just a period of time. Say our 10-day moving average has crossed on 21st April, that's a crossover, and our 20-day moving average has crossed on 29th April. So it's really not much of a difference, it's just 8 days. So this is at this point we are having a double confirmation that this stock is going to go on an upward trend for a long period of time. We have double confirmation. Already our 10-day has crossed our 50-day, and also now we are seeing that our 20-day has crossed our 50-day, which gives us a confirmed point on 29th April that you can invest at this point, so that you could have a good amount of profit, or otherwise to say you can have a minimal risk, and yeah, you'll really not lose the investment that you make in this point. So some traders would like to take place and go into trading at this point when our 10-day has crossed our 20-day, and they say that it's going to go up on a short-term upward trend. And yes, indeed it has also been confirmed that it's going to go on a long-term trend, so it's not going to be a problem for them. So when you are going as a beginner, at least wait for two indicators to say that it's a go and your assumption has been confirmed, so that you could reduce the risk that's involved in this investment. So also I'm taking in day trades of Apple, so it's swing trading here. So when it comes to swing trading, so here let me take an example that I'm going to invest on 24th of April, and I've been waiting until the next convergence point. So a few traders might come out of the trade at this point because it has almost came to a convergence right over here, but it really did not converge. It again went up. So we could get out here. We could still have a considerable amount of profit. So here I have had this, I've been holding this position for around from April to July, so it's around 3 months. So when you go for this much long holding of positions, it's a good thing that we take a look into the fundamentals and the financial analysis of this company. So Apple has been doing good. So we could say that this investment is safe to make right now. So right now here at this point we could again see that our 10-day has crossed our 20-day, saying that it's going to go on a short-term downtrend, which has been confirmed as a long term, but indeed it did not go down very much when it has crossed the 50-day moving average. So at this point let's take a look at the previous historical prices of Apple. So in this trend we had a really long run in Apple. So here we, our 10-day as well as our 20-day moving average has crossed, our 10-day has crossed on 20th of June 2019, and our 20-day has crossed on 1st of July 2019. So when you take a place, or when you place your trade on 2nd of July 2019 at a price of $50, and you still wait until the next convergence, so you could set your own strategies, like you could follow one of these moving average. So when a 10-day cuts off, you could take your trade out, so you're going to have a short term profit. And when you go for a 20-day moving average, you have to wait for a considerable amount of time in order to get a profit. And you're following a 50-day, you have to hold a position for at least 1.5 to 2 months. So you're going to hold that position in order to gain a good profit. Okay, so here if I follow my 50-day moving average at here, so I invest on this convergence point when my 10-day moving average crosses the 50 on 24th of July, actually it's 20th of July 2019, and I hold my position and I wait until my 10-day converges with my 50-day again, when it makes a crossover and it goes down. But actually at this point it didn't go down, it went up instead. So it really did not had a crossover for how many months would that be, from June, and it's been over 8 months. So I've been holding this position for 8 months until it had a crossover at this point on 27th February 2020. So if I exit my trade at this point, what will be my profit, or what point am I exiting right over here? Let me say I have exited my trade at $68 per stock, but actually when I bought that stock it was 49. So still I had around $20 profit for my every stock that I have bought. And even if you take off the brokerage costing and taxes, etc., you still would have a profitable trade. So when you make a rule, you have to stick to this in terms of trading. That's how it follows. I made a rule that I will follow my 50-day moving average, and my 10-day and 20-day is just going to be like confirmance. So it's for a confirmation of my assumptions. So instead, if I had or considered my 20-day moving average, I would have gotten off my trade at this point. So instead of when I followed my 50, I had gotten off at $68 at this point. But when I followed my 20, I would have gotten off at 75, and but it's pretty much good. Okay, so it's good. But in between, we had a lot of confusion. So here, if I followed my 20, I would have had a confusion at this point, and also at this point at $65 right over here on the month of December, and at this point. So we have to make a decision. It really did not had a convergence or a crossover. 10-day did not cross over 20, but it came as nearby. So we have to also keep a look into it when you go for long term. Also keep a look into your stock's performance. That's it for moving averages. Maybe we can take a look into another stock also. Let's take a look into the Microsoft stocks. The concept is similar no matter what company you select. So when you go for a long term like swing trade or something, so you really have to consider the fundamentals of the company. The financial analysis of the company is very much essential. So that you're even though these indicators and stuff they say it's going to go on an uptrend or downtrend, you must always take a look into the quarterly reports or half yearly reports of the company, their income statement, and keep a look into it that your investment is safe when you go for long term. When you go for intraday, the trick is you actually need not take a look into the financials of company, because we are going to go in the morning and we are going to come out on the evening of the trade. We are going to exit the trade in the same day. So here this is today's intradays of Microsoft. The prices actually have started at $211, and it's been considerably going up. So when I follow my 50-day moving average, my 10 and 20 are already up above my 50 days, so it's definitely going on an uptrend. And I would put in the morning and I would wait until it goes up. So at this point my 10-day and my 20-day has crossed my and went below my 50-day, which means going on a downtrend. So I would exit my position around here. So I had around like if I invested at around this point, I had $211.82, and I exited at this point, that's 214.52. So it's still I had around $3 profit of my stock, per $3 profit per stock. It's still good. So it goes for a long term. Instead, when I follow my 10, I'm going to go into the trade, take a position for a short term. So if I had followed my 10, I say I had invested at this point, and it went below 20 at this point, so I will come out of this point. So when I invest at this point, it was $211, and when I exit my position, it's $212. So I exited at $1 profit. Okay, so when I follow my 50-day moving average, I exited a profit of $3, but the waiting period or the holding period is considerably high when you go for 50. So yeah, this is an intraday and it's a 1 minute stock. It's a 1 minute data, and it really doesn't matter about the financials of the company, because whatever be the financials of the company, we are going to take take a position in the morning, and we are going to exit the position in the same day. So this is how pretty much the moving average works out. So I have here used 10, 20 and 50-day moving average. You are free to use any combinations of moving average you want. Try out different combinations like 13, 26, 39, etc. Try out all those different combinations, and take the combination that best suits for you, and check out the profitability of every combination. Check out how many points has the convergence has occurred, and what is your profitability, or what is the amount of risk that your combination has provided to you. So this is how trading goes on. Thank you. I'll see you in the next video with a new topic. See you soon.